Let's go, let's go, let's go. Happy Easter, guys. I'm gonna let some people get in here, then we'll get it going. All right. Do it. How's everyone doing? What's up, what's up, what's up, what's up? Whoopsies. Yeah. Whoops. My bad. Alright. You guys know the drill. We're doing it on YouTube again now. I'm no longer gonna do the forecast in the Discord. I'm still gonna obviously be in the Discord every single day, posting analysis, answering questions, doing all those things. But we're doing the free live trading stream once a week on YouTube, and then we're doing the forecast on YouTube again. And I'm doubling down on YouTube content. Like, I want to make ideally one YouTube video a week. Restaked, what's up, brother? How's it going? I want to have one video out a week on YouTube. That's the plan. My cat is laying on top of the mouse right now. All right, let's get the economic calendar out here. You know the drill. Y'all know the drill at this point, right? This is going to be our guidance for the week, right? This is going to be almost like our saving grace to know when not to trade. I don't want to drop any names. I don't want to put anyone on blast or anything, or feel like I'm dissing anyone, so don't take this the wrong way if you're watching. But I had a student message me this week saying that he blew his account last week, that he overtraded. And I just think that last week was the epitome of knowing when not to trade. You know, that is where chart time understanding these markets and when to pick your shots and when to push the risk is so key, because if you don't, you're going to send yourself into drawdown and you're going to blow accounts like my student did. And the reality is my model only really gave one good setup last week. So to be taking 4 or 5 trades that week, the Harmony itself really shouldn't be providing models in low probability conditions. Like the model's made to trade expansion. And so when the markets are just in straight consolidation for an entire week, you really shouldn't have setups like that. And it was, built that way. But anyways, knowing when not to trade is a superpower, and you really need to know, based on the economic calendar and based on how the week's playing out, if this is a week to push risk or not, right? So last week, I literally had one trade for the model, and I was flat on the week. There was one, I can go through the trade. There was one trade on silver that was valid for my Harmony model, but because prop firms don't allow micro silver, I couldn't trade it because the mini was like $1,000 worth of risk, and I can't risk 1,000. That's over risking. But there was basically one model. I can go through it if you guys want. Thanks for doing it on YouTube, so we can absolutely, yeah. I had a ton of people saying that. They're like, can you record it? I did record it and it got messed up, so I was like, all right, I'm gonna just do them on YouTube going forward. It's easier, and I want to grow the YouTube, so I think YouTube is the way. It's just better. So, all that to say, let's get into this economic calendar. Knowing when not to trade is a superpower. Knowing when to push risk and knowing when to be risk off is just fundamentally important to being profitable. If I'm just pushing risk at the wrong times and sending myself into drawdown, well, then I have to spend all that time clawing out when I could be making money, right? So if you're protecting capital and you're putting on risk at the right times, your edge is a lot sharper. So it's not only about knowing when to trade, but it's about knowing when not to trade. And I think that's something that people don't understand. People think, there are some people with models that trade daily, but I don't believe personally, for how I trade Harmony and my model, I don't believe that every day is a trade day. And so like Monday, this already to me is hinting, probably not a day to push it. If there was clear fair value gaps and obvious draw and something looks beautiful, then yes. But I don't see USD, but almost every currency here has a bank holiday on Monday. There's no red folder news on USD. Monday and Tuesday are likely going to be lower probability days because there's no news, right? News is our energy. News is our driver of price. So when price is reaching, let's say price is in an uptrend and we pulled back, if price is going to reach up here to this line, we want to see news drivers send it towards that. Versus if Monday and Tuesday have nothing, we usually do this, then go later in the week when there's news, right? So understanding these type of things is very, very important to preventing yourself from drawdown and just identifying the area to put risk on. Because it's not just about trading a pattern. It's about framing a narrative every week. And it's about positioning yourself in the right market conditions. Also, I changed my thing. I don't know why it's like that. Hold on. Oh, you know what I have to do? Hold on, guys. Give me 2 seconds. I want to update my indicator. Apply these. There you go. Boom. All right. So Monday and Tuesday already look lower probability, and I wouldn't be looking to force anything on those days. I would actually be expecting consolidation just like last week. Last week was absolute, like, I want to say something bad. I'm just refraining from saying it. Last week was so bad. Last week was a terrible week of price delivery. Anyone who says otherwise, I just respectfully disagree. 1 hour, 4 hour straight consolidation the entire week. And that's to be expected after such a volatile week prior. So much going on with Trump tariffs and all these things. There's a lot going on in the world, and we had crazy volatility the week before. So having a week like last week of chop makes a lot of sense, right? Because what follows expansion? Consolidation. So Monday, Tuesday, not looking to push it or force it. If things are obvious, if something is obvious and it jumps out and it has fair value gaps and intention, I'll trade on days without news personally, but I'm very skeptical. And on these 2 days, price almost has to prove to me that it's high probability. Whereas on these days, I'm less skeptical. I'm saying, okay, we have volatility and we have news drivers to send price, so we're more likely to get expansion. But on these 2 days, price needs to convince me that it wants to expand, and I think that's a very important distinction to make. So Wednesday we have euro, pound, and US dollar news. Just all flash manufacturing, flash services, PMI, and then Governor Bailey. So euro, pound, and USD look a lot higher probability from Wednesday onward. So from Wednesday onward is when we should have more volatility in news drivers to push price in whatever direction we're looking for. USD unemployment claims on Thursday, and then no other red folder on the day. And then Friday, pound, Swiss franc, and Canadian dollar. So just off the bat, we know that these 2 days are likely going to be lower probability, and it would not surprise me if they consolidate. And I'm going to be going into Monday and Tuesday expecting chop and expecting price to just want to consolidate, because it needs to convince me that it wants to move, and it needs to convince me on these days that it's high probability. Also, I thought about changing my chart colors. I actually did change it for a little bit to this. I don't know if you guys like that less, like that more. What do you think? What's the verdict, chat? Yay or nay on the Tar Heel blue? I just feel like everyone has these colors. Kind of want to be different. Save as. What do we think of the? What do we think? I just want to see what you guys say. It's kind of clean. Like, it's kind of, and no one uses these colors. I kind of like it, but I don't know. Hard to see. That's kind of what I thought you guys would say. That's valid. Got you. Yeah, no. I figured, yeah. It's like clean, but it is harder to see, absolutely. I agree. And I want you guys to have the best experience viewing these charts. So we'll leave it. We'll leave it. All right. Dollar. You guys know the drill. I can't speak right now. You do what's best for you. I got to do what's best for the people too, though. I want to teach, man. I want you guys to be able to see what I'm showing. So I'm going to do this. It's all good. So going into this week, now that we understand the news drivers on Forex Factory, we start with dollar. And when we're trading majors, when we're trading these currencies, you know, with Harmony, I've been trading euro and pound, just 6E and 6B, the futures contracts. I need to get a feel for what dollar is doing first. So Monday, Tuesday, likely lower probability consolidation. Need to be convinced price wants to expand. I have that in mind going into this week. On the monthly, we have this breakaway gap. Breakaway gap meaning I'm not expecting this to get retested at the very moment. I'm not expecting this to act as a draw, because looking at this third candle, price just flew towards the sell side down here, right? So we've taken a major liquidity objective, a major order pairing objective here on the monthly. And this is where you want to be looking for retracement, where you want to be expecting reactions. I frame all of my trades within boundaries. This is something I teach my students, and it's about positioning yourself, like I would say, in the right trading environment, taking trades at the right times. It's not about just trading a pattern. It's not about just taking a order flow flip entry. It's about knowing when to trade and positioning yourself in the right environments. So I trade within boundaries. This to me is the loss of a boundary. You know, now that we have this order pairing objective met, well, our boundary to operate within is now gone, and we need a new boundary to operate within. And so what we're seeing here on the weekly now is, after sweeping that monthly sell side here, right? This is it. We have a weekly bearish fair value gap, right? This weekly SIBI price right now at this weekly open is trading lower, and we have previous week low right here. I'm actually gonna change this back. So we have previous week low right here. I want to gauge the reaction of this previous week low. Do we want to just deliver to this sell side down here, sweep or run through previous week low? That's what I need to be gauging. So in the short term, I think previous week low looks like draw to me. It's very, very close to it. Do we want to sweep that and then retrace to offer fair value on the weekly? Or do we want to run, you know, both these lows, then retrace? These are the things I'm gauging, right? So we have these sell side liquidity objectives here, and then we have the gap up here that makes it interesting. So as of right now, you know, based on this candle, the 4-hour and daily are pointing lower. We have daily internal to external. So these two sell side objectives have my eyes, and the 4-hour should be pointing lower, right? It is. So basically looking for, at this point, these to get hit because we're so close to it. And then from there, I'm gauging, do we sweep this to work back and offer fair value on the weekly, or do we run through it? That's what I'm gauging. So short-term bearish on dollar towards those sell side objectives. And then from there, I'm saying, do we sweep that liquidity, or do we run through it and continue expanding lower? Because if we sweep it, well, then I'm going to be looking for price to want to offer fair value now on the weekly, because we know when price has successfully taken liquidity, it's going to offer fair value before potentially heading lower. So that's how I would be viewing this week. I'm bearish in the short-term dollar, and then I'm going to be gauging how it reacts from here. Indices. It's all in there. I think I was teaching something there. Monthly. I'm going to just go ahead and get rid of all my drawings right here. Okay. There's not much for me to pull from the monthly. We have this swing low sweep. Something I mentioned to Academy members was this. If you look on the monthly, I mean, this looks really clean. For how I view price, for how I teach, this is a classic signature of offering fair value, right? This area of fair value, wicking and respecting it. And that's a good signature for higher prices. That being said, I still need to gauge the reaction from premium arrays, and I need to confirm that we still want to go higher. So for example, on the weekly, this entire week, I was looking for this bearish fair value gap to get hit. And it was a weird week of delivery where we kind of just traded up and then we just didn't tag it. And it threw me off, and it was just a really bad week of price action, in my opinion. I didn't take any trades on indices, and I didn't think they looked good at all. You know, look at the delivery this week. Monday, straight range. Tuesday, somehow within that range, closed in, right? An inside bar. This is what we call an inside bar, an inside candle. This was a range day, and Tuesday ranged even more within that range. Just garbage. And then we moved a little bit, but just straight chop right here. Terrible week of price action in a week where you don't want to be pushing it, like I said at the beginning of the stream. Now what's interesting is how ES has that SIBI. I want to be seeing price reach for this and then gauging how we react from here. Daily, straight consolidation, not much to pull from it. And then 4-hour, I don't know why it looks like that. Settings. The 4-hour doesn't look ideal, and we have this 4-hour BISI that's being respected. I need to see what the 4-hour wants to do going into this week. If we just trade lower and we get 4-hour gaps to the downside, I'm going to look for this external. But if the 4-hour continues to respect this gap and create new gaps to the upside, if we continue with bullish order flow here, if this was a successful order flow flip and this holds, then I'm going to look for price to reach for this SIBI that I was looking for last week. So I could see it going both ways, and I kind of need this on the wait list because I need to see. I'm basically just gauging this compass time frame. You know, the 4 hours acting as my compass towards this weekly SIBI or the weekly sell side down here. And so the 4-hour either confirms or denies this sell side reach. So just throwing it on the wait list, and need to read the 4-hour order flow as my compass. Same thing on indices here, right? It's going to be very, very similar analysis on the NASDAQ. NQ didn't create that SIBI, which is also interesting. Not using the daily gap. Which daily gap? To me, this is old, and we already closed above it. I'm talking about this one up here. This one's relevant, and this is the area of fair value, but price already delivered off of that for me. So it's like just not really relevant to my analysis right now. Yeah, I got you. To me, this is already used, and it's just basically irrelevant to me understanding where price wants to go in the short term, you know? Not to say that it can't be relevant to other people, but for how I view price and what I do, I'm just viewing this condition of price as consolidation, and then the weekly and 4 hour are really going to be telling for me about, does the 4 hour expand towards the weekly SIBI, or does the 4 hour continue bearish order flow towards the weekly sell side down here? To me, the daily candlesticks and information don't really provide much, because this has already been delivered off of, if that makes sense. So NAS, same thing, same logic, right? We do have the little gaps and whatnot up here. I would have been marking it out like such, this daily leg. So we've already delivered off of that, and it's just been really wonky on the daily consolidation phase of price. So I don't really gain much from marking that out. No SIBI on the weekly on NAS, and just exact same thing. You know, I pair these indices together. I think that when you pair them together like this, right, this is how I set up my chart with Harmony. For those that want to trade the model, those that don't understand how the chart's set up, these are the settings, right? Just two back-to-back charts or side-by-side charts, and then these are the settings for how I sync them. And so what this does is it gives me the full picture. It gives me all the color. It allows me to understand, you know, the entire narrative, as opposed to just viewing one. I feel like it's more of a black and white picture that you're viewing. You know, NQ could sweep major liquidity, and then ES starts reversing, and you have no idea why. And it's because the sell side got hit on NQ and there's SMT, or just things like that. What is your full watch list of Forex pairs? I'm not trading Forex right now. But this is how I have it set up. This is how I would recommend doing it. Basically, how it's set up for Forex is majors, and then have the different baskets of currencies, right? So we have euros, yen pairs, Swiss franc pairs, Canadian dollar pairs, New Zealand dollar pairs, right? So they're almost like baskets, and you can see how most of the baskets, you know, are all green or red. That's how I would recommend doing it. But not much to say about NAS. Same thing as the S&P, where I'm just waiting for more price action and engaging based on that 4 hour compass and order flow. Also, happy Easter, guys. I hope you guys have a good day. I'm actually gonna be going to my sister's in a little bit. I have like an hour drive, which is gonna suck, but I'm gonna go see my nieces and my sisters. So same logic here, right? See that daily gap you mentioned? Well, to me, that delivered off the area of fair value, and so it's just not really relevant to my analysis anymore. You know, price has already delivered off of it, and so that's kind of why I didn't make note or put any emphasis on it. YM looks a lot more bearish to me, but again, we have that weekly SIBI up here. The 4 hour, yeah, YM is looking bearish. At least right now, YM doesn't have a hint of bullish 4 hour order flow. It's straight sell off, and YM, if it's any hint at what's going on here, is definitely looking bearish. Like, I wouldn't even be needing this to be on the wait list just to say, okay, I think we're just going to deliver straight to the sell side. I'm still going to go into this week and gauge that, though. So what we could see is kind of just consolidation Monday, Tuesday, and then we begin to reach for the sell side lower. But then, of course, the inverse is true. If we flip and we get bullish order flow, then I'm looking for the weekly SIBI, right? So either here or here, internal or external. It's the core of everything that I do. It's the sauce. When you understand it, when it clicks, I'm telling you, you don't need anything else. I'll die on that hill forever. You know, I hope that I can give you guys the label moment with internal and external, because it's so powerful, because it's just the foundation of how price moves. It's the logic simplified. Order mitigation, order pairing. Russell, new daily on recent leg. Let me see. Yeah. Yes, sir. Yeah, this looks much more bearish. 100% agree, Sage. Looks a lot more bearish than ES and NQ. Russell, monthly sell side sweep, weekly has the SIBI. This candle looks a lot more bullish, but that was just a consolidation from last week. The 4 hour is likely bullish here though, which is interesting. Yeah, there are mixed signals right now. So definitely everything indices wise would be on the wait list. Like this is 4 hour bullish order flow for me. And it's the same thing we saw on the other indices besides Dow, where we're respecting the 4 hour gap. So just really conflicting stuff in my opinion. But YM definitely looks the weakest right now. It's not even close. NQES are meh. Yeah. NQES and Russell are 50-50 to me about where they're reaching for, either here or here. And because, you know, obviously YM is correlated with them, I would be waiting on that as well to see, but YM looks way weaker. Now, Euro, any majors like this are very contingent on what I'm expecting out of dollar. And so it's going to be very contingent on how dollar reacts from these areas. Do we sweep the sell side, or do we expand through it? Do we begin to reach for the weekly gap, or do we just continue lower? Well, that's going to affect how I trade euro and pound this next week. So euro's been very strong. We're expanding through these buy side objectives, right? We didn't really sweep them at all. Now we have this new bullish fair value gap here that looks really, really nice to create a boundary to potentially operate in. Now this weekly candle is very bullish, and we have previous week high up here. So we'll see if we want to go and run that first, because the 4 hour looks very bullish and we're expanding. But we're basically gauging here, do we want to trade towards previous week high first, or offer fair value on the weekly to then have all of this boundary to operate within? Very contingent on dollar and what dollar does. So if I'm bearish dollar, I'm bullish euro. If dollar sweeps this and then I'm bullish dollar, I'm going to be bearish euro to offer fair value here. So if dollar is going to offer fair value on the weekly, then euro is going to offer fair value on the weekly, right? So everything that I do when I'm trading majors is contingent on dollar and having that in alignment with my trade idea. There was a textbook A+ harmony model on the 1 hour, a swing model. I'm not swinging harmony, I'm just trading it intraday, but obviously the model's fractal, and it was just so nice. Euro and pound, textbook harmony model. Textbook stuff, just beautiful, beautiful delivery. Look at the internal, the external boundary to operate within, right? Every trade I take has a boundary like this to operate within. We have SMT right here with euro. See how this makes a low and then a lower low, and this makes a low and then a higher low. We have SMT once we hit the internal. Change state of delivery or order flow flip entry, whichever you prefer, right? They're both offered right here. Just textbook. This is harmony to a T, A+ setup. My friend Zay, he's in the academy. I told him to take this. I was like, bro, you have to take this. This thing is really, really nice. Beautiful setup. Whether you want to take the bodies are fine. You could take the swing low. My stop loss is always either going below the protected swing low or at the bodies of that leg. No, nothing else, you know? That's always what I'm looking for. So like that is fine. Target 2R in the direction of that draw higher. And this is just a beautiful trade. A+. Big fan. I can get to 2R. So that delivered within, let's just say we got tagged. Let's say we took the change in state of delivery, you would have got filled on this candle. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Wait, no. It delivered on this candle. Sorry, wait. 1, 2, 3, 4, 5, 6, 7. So like 7-hour swing. You're hitting 2R. That's beautiful. A+ trade. That's harmony to a T. You know, I'm trading this exact logic, this exact setup fractally. So usually 1 hour to 5 minute, 4 hour to 15 minute, or 15 to 1, or 3. So same logic on pound. I missed that setup. Yeah, it's all good. It was really clean though. We'll say that. Monthly buy side up here. Still have a buy side objective up here. Weekly delivered off this area for value earlier. That was really nice as well. This is irrelevant to me now, just marking it out to show how beautiful price delivery is and how simple it can be. Daily leg is going to have, yep, exact same expansion we just talked about. And so now if price is going to continue higher, I want to see it just create new gaps. You know, I want to see price create a new leg up here to head higher off of. Would you drop to the 5 minute to get an even better entry on the 1 hour gap? If that was within kill zone time, yes. Yes. If that was within kill zone time, that's just like a textbook harmony fractal setup, like within like an intraday model. But it needs to be within a kill zone for me. How do you get the date on the chart? It's an indicator. Where is it? It's this indicator. ICT water. Shout out 2 degrees, man. But this isn't 2 degrees. ICT watermark flux. But shout out 2 degrees. 2 degrees ago. That's what this indicator is. So yeah. Very, very contingent on what dollar does. You know, I say this every week. I don't trade majors unless I feel like I know exactly what dollar wants to do, because it affects them so much and it's too important. It's too important to not factor in. It's like trading blind. If you're trading euro or pound or any of these majors, in that case, like without understanding the direction of dollar, in my opinion, you're trading blind and you're doing yourself a disservice. So basing things off of fair value, we've offered sell side, we've offered buy side. And so with pound USD, if we continue to get lower dollar, I want to see it head higher from here, right? If we're going higher on pound, we should do so from this area of fair value. We should wick and respect this and then continue higher, right? That's just understanding price delivery, efficient price action, sell side, buy side. So I want to see higher prices, and ideally I want to just see a gap get formed through this. Would be nice, but we'll see how that goes. So you don't think that on pound USD it's so high and expanding so much that it might lose strength? It's really contingent on dollar, like I always say. Will it lose strength eventually and offer fair value again? Absolutely. That's just price delivery, 100%. But if dollar just, like in the short term, I'm looking at these sell side objectives on dollar, which should happen pretty fast. We're close. And so once those go, pound might just wait up, because pound's not going to fly like this unless dollar's bearish, right? Look at dollar. Dollar was selling off. So pound's not going to go up and be strong if dollar's not weak. And so if we sweep those sell side objectives on dollar and then we start working higher on dollar, well then, yeah, pound's going to pull back. And so that's why what I'm saying is it's just, it is very, very contingent on dollar's direction. Australian dollar sweeping that monthly sell side. I don't like this at all. AUNU, I'm not a fan. I haven't been touching them at all. straight weekly chop. I'll mark out the next sell side objective. We already took these. Just not the best delivery. I'm not a fan. We've been expanding lately, but just really not that clean delivery. Area of fair value. Really not nice. So these will go on the wait list. I like euro and pound potentially set up, but I need to see dollar clarity. I need to see clarity on dollar, and I need to know exactly what it's doing. New Zealand dollar USD trading into this OB. We have this bearish fair value gap up here. Weekly, no gap. Nice expansion though. There's definitely daily gaps in here, right? Daily overlapping area. No gaps in this leg. So we'll see what this wants to do as well. I like New Zealand dollar a lot better than Australian US dollar to me. I mean, the chart looks better. They're both meh. Like, I wouldn't be trading these right now, but that's just me. Monthly USD CAD. Again, all of this is very, very contingent on the direction of dollar. Let me keep reiterating that. So going into the week, I'm gauging where dollar is reaching for, and I'm only trading euro and pound when I know exactly what dollar is reaching for. So I need a high conviction in dollars draw. Weekly gap to downside. Monthly in a area of support here. This is definitely an area where we can begin to struggle and pull back. But for that to happen, we need higher dollar, right? If this is going to offer fair value on the weekly, we need higher dollar. Consolidation, kind of just messing around here, which is what I would expect right now based on where it just reached on the monthly. And so just a waiting game on USD CAD. Again, everything is just waiting game. Straight chop, waiting game as well on USD CHF. I'm already knowing that this is going to be a waiting game as well. We have the weekly area of fair value here that actually is really clean. I like that. Not expecting this to get reached for. If anything, if we're going to go and offer fair value, well, this is the area to do so. And then from there, we're gauging, do we respect it to move lower, or do we invalidate and move higher? Contingent on dollar. Yen. Monthly breakaway gap, right? This monthly SIBI is just not being retested right now. I'm not looking at these gaps to act as a draw because price is showing just intention to move lower, weakness. So I'm looking at this sell side drawdown here because we're just creating gaps to the downside. Now right now it's kind of just, again, exact same thing as CHF and CAD, where we're just consolidating and waiting on direction of dollar. Crude oil, good old crude oil. I think these drawings are messed up because it probably rolled over the contract. We have just traded into this area of fair value. I guess I'd mark it like this because that's the overlapping swing point. This is the first overlapping area, right? We have a bearish fair value gap. Then we have a swing point overlapping with it right here. So this is our overlapping area. People like to use discounted premium. Well, we've effectively offered premium now. So from here, if we do want to go lower, that could be a nice boundary to frame shorts with, and I don't hate that. The problem with crude oil that I've been saying that I don't like is when we're in a monthly consolidation like this, weekly and daily gaps like that tend to not respect. Like, look at this gap. Look at this gap. Right, so weekly and daily gaps tend to fail more when the monthly is in a consolidation. So if we get some confirmation that price actually wants to move lower from this internal, then you could have nice shorts on crude oil. So we'll throw it on the wait list and see if the 4-hour flips and if this begins to move lower. But because it's in a monthly chop, we swept this monthly sell side. It's consolidating. We might just invalidate that and go higher, right? So understanding where you're operating within is super important. So let me break down this logic really quick for you guys. Crude oil is in a consolidation. We're sweeping both sides, external buy side, external sell side. We just swept this major sell side. And so because we're in a consolidation, there's a chance that we just invalidate this and work higher for the next sell side up here on the monthly and then go right back into the range. Like, look at this range. And so it makes me a lot more skeptical about gaps when we're within a consolidation. A fair value gap within a chop on the time frame above is a lot lower probability than a fair value gap within a higher time frame expansion. And that is very, very important to understand. Not all gaps are made equal, and that right there is a gem. I just gave you guys a gem. Like, that is super, super important to understand. What's the best pair to find SMT with Bitcoin? Euro, or not Euro, what am I saying? Ethereum. I would just use Ethereum. ETH and Bitcoin for SMT correlation. I don't trade crypto, but that's all I would use. Gold has been absolutely printing, and gold has been the type of asset that you want to be focusing on, right? When we have expansion, when we have clear intention and draw, this is when you want to be trading. So like this weekly boundary was textbook. This entire week, once we offered fair value, you should have been focused on gold. This entire week, you have this boundary to operate within. Just beautiful. A plus, like these are the conditions that you want to frame trades within. So this boundary is what I like to call it. These boundaries are super important to understand. And you're positioning yourself to trade within boundaries only. If there's no boundary, there's no trade. Right? You need some form of boundary to operate within. When you say fractal, you mean like intraday? Intraday, it fluctuates from like 60s to 70s, like low 70s, mid, low 60s. It'll fluctuate, obviously, depending on the month. Like, not every month is going to be a crazy strike rate, and not every month is going to be a low strike rate. It's very contingent on probabilities, you know? It's always funny to me when people are like, yeah, it's 110%. It should, if you're executing using the logic I teach and you're trading it the right way, your strike rate should be well above 50. Now, some people, like me trading this model isn't the same as someone brand new to it trading this model, right? That plays into the strike rate, if that makes sense. So someone just trading the model without narrative, without understanding of when to trade, they're not going to have nearly the strike rate I have. But when they understand these things, just from studying what I teach or being a student, then their strike rate gets to where it needs to be. It's like, for example, last week is a perfect example of that, Sage. If you trade, not you, just you in general, like anyone. If you traded last week Harmony and you pushed it, you're going to have an extremely low strike rate in comparison to me this month. If you pushed it in this condition because you didn't know better, your strike rate is going to suck this month. Whereas me, I knew not to trade this, and I was literally flat last week. There was one set up on Friday that I couldn't take because of the prop firms, but I knew not to push it in this. And so someone that doesn't understand these things will have a lower strike rate, but it takes time to learn. And you can only learn that through experience and through either having a mentor or chart time. But yeah, strike rate is well above 50 if you know what you're doing, which you should. If you're studying the things I'm saying and you're actually applying them, then yes, absolutely. And 50 with 2R is a printer. If you're getting a couple of trades a week and your strike rate is only 50%, like if not even higher, only 50 with 2R, that's a money printer. And people fail to realize that. They think they need to win 80, 90, 95% of the time to make money, bro. No. It's all about that correlation. Win rate and R. That's all it is. It's this correlation. So you can make money with an extremely high win rate and low R. And you can make money with an extremely low win rate and high R. This is profitable right here. 30% strike rate with 4R. 34% strike rate with 2R is right above break even. That's profitable. 33%. just let me explain this. This is so important to understand. This correlation right here puts you at a break-even trader. Just that. You only need to win 33% of the time to be break-even. If you can get to this point, just break-even. You have so much room to grow and get that win rate to 40, 50, 60. You know, the stuff that I'm showing you, if you're applying it correctly, your win rate can be 60, 70 consistently. So you're doubling what you need. Like, that's a printer, bro. That is actually a printer. It's just about embodying the person that can trade that win rate in that model. Right? So Harmony is a very strong edge. Not only do you understand correlated tickers, right? We understand ES and NAS. Like, this is the breakdown of Harmony. Indices, metals, and currencies. So we have ES and NAS, we have gold and silver, and we have euro and pound. Well, when you understand correlated tickers like this, you get the full color of the picture. And you know what else you get? You get intermarket analysis. So when you understand intermarket analysis, you're understanding the flow of money. Throughout the year, you know, money is flowing through different asset classes, right? They pull their money out of indexes, money flows into gold and metals. So you're getting so many different forms of edge with this model. Intermarket analysis, correlated assets with SMT, understanding where the money is everything in this game. It really is. You're positioning yourself to trade the right times, the right market conditions. Yeah, 1 to 2, and just keeping your strike rate above 40. That's as long as you're not, you know, doing the example I gave before, pushing it in weeks like this. You should not have, you know, less than a 40% strike rate, even if you don't know everything yet. Like, even if you don't have the things I'm teaching mastered, your strike rate should not be lower than 40%, unless you're just taking setups outside the model or you're forcing things in this, because I only saw one valid model for Harmony last week. The model is built to keep you out of market conditions like this. Right? So you need to know when not to trade, and you need to know when to trade. If you're trading the model correctly, you should easily have above 40 in 2R. You know, mine fluctuates from 60 to 70. Yeah, 2R and 50% is straight money printer. Higher time frame, internal, external, vice versa. Structured time frame, and entry on lower time frame. Daily, right. Now, the one thing that people I think get wrong, Sage, is it doesn't need to be like every setup. And what I mean by that is, if this is the draw, daily draw, this is the what matters. What I never, how do I articulate this? I'm trying to make a point. Let me think about how to explain this. What I never compromise on is my narrative time frame to my entry time frame. So if I'm trading off a PD array here on the 1 hour, a 1 hour gap or liquidity, I'm always entering on the 5 minute at the minimum. You know, I won't enter any lower than the 5 minute. If I'm trading off a 4 hour PD array, I'm always entering on the 15 minute and nothing lower. If I'm trading off a 15 minute, I'm always entering off the 3 minute or the 1 minute. Now, what you can swap and interchange is the draw. So it doesn't always need to be daily 1 hour to 5 minute. It could be like a weekly draw towards previous week high and then a 1 hour PD array. Or it could be a daily draw and then a 15 minute narrative PD array and then a 1 minute or 3 minute entry. You get what I'm saying? So I think people get a bit too rigid with that. It doesn't need to be weekly 4 hour 15 minute, daily 1 hour 5 minute. That's the alignment, but you can interchange the draws, like weekly draw with a 1 hour. You know what I mean? So important to understand. I'm dropping gems in this live stream right now. Gems. I'm really laying it out. I'm trying to go in depth for you guys because I know the people in here are hungry to learn. I'm happy to help, man. 4 hour, 1 hour stepping stones. Right. The 4 hour, 1 hour, they act as the compass for the time frames above it. USDs are. I'll check it out. I've never traded that, but I'll check it out. And then I'm going to have to wrap it up. Let me look at Bitcoin really quick. But yeah, man, as long as you're disciplined and you're trading the model when it says to trade, you're chilling. And then you just have so much more room to grow. Because then there's little nuances that you learn, and your strike rate only goes up as you learn to position yourself in the right market conditions, and you learn when to be risk off and risk on. Of course, bro. Of course. All right. So, monthly bullish fair value gap, just consolidating within it. Area of fair value right here. Weekly consolidation, not much to pull from this, right? None of this is relevant to me. This is just chop. So there's just really not any information that you can pull from the weekly other than this sell side sweep right there. On the daily, right, that's going to look like this swing point over here. None of that is relevant to me. And this is just really ugly price action. Straight consolidation on the daily, straight range, not something that I'd be looking to put risk on in. So this is a perfect example of what I was talking about. You know, this plays into the edge. Knowing not to trade this and focus on a different asset that is expanding is part of my, why my win rate stays high. I don't need a 90, 80% strike rate. All I need is to win more than 34% of the time every month. That's it. 34% of the time. That's it. Simple. So weekly chop, daily chop, there's just not much to say. There really is not much to pull from this. We have the monthly previous month low being swept, and we're just consolidating. Like there really isn't much else to say about Bitcoin right now. At least for me, I wouldn't be touching it, and I would be waiting for it to clear up. Because we did have a daily flip. I was looking for the monthly to want to trade into here to then potentially head higher or gauge what happens there, but just really ugly price action right now. So with Harmony, I've back tested it for myself, but I haven't done one with the community. But I'm planning on doing like a whole public event, like a back testing session with the community. Also, what's up, Caprice, bro? I remember you. What's up, bro? Welcome back, brother. I hope you're doing well. You guys got to enjoy the day, though. If you are going to see the family, I would encourage you guys to be very present, man. Be grateful. Practice gratitude today. I don't know if you guys are Christian, but regardless of your faith, just enjoy the day with your families, man. We're blessed to be in good health and be with our family. So I'm going to wrap it up and go drive an hour to my sister's. Not looking forward to that, but I am looking forward to seeing my family and my nieces. And one last thing for change of state of delivery, we always prefer the sweep of liquidity along with. So a high probability change of state of delivery is going to take some time or some form of lower time frame liquidity or higher time frame liquidity. If you're looking left, there's always going to be some form of liquidity that gets swept, but a high probability CISD is going to sweep liquidity, and it's going to create a fair value gap. USDs are. I'll look at it really quick. So this is a high probability change in state of delivery where we create a fair value gap and we swept liquidity. I like to use both order flow flips and CISD now because it just gives me more opportunities to get involved. NASDAQ correlates with all these indices right here. I only use ES and NASDAQ together for the sake of simplicity, but all of these indexes, these are the US markets, right? All of these are correlated. So NASDAQ correlates with the S&P 500. It, correlates with the Dow. It correlates with the Russell. Right. NASDAQ, and you can use US. I would encourage you to use all the same instruments. Like, just use all the futures instruments or use all the CFDs. You have a Discord? Yeah, bro. I'd love to see you in there. I feel like my Discord should be way more active than it is. I'm really active in it. I post analysis every single day. I'd like to get the activity up in the Discord. That's the link right there. There's no Hold on, wait. I gotta look at USD ZAR for him really quick, and then that's the link to the Discord. Make sure you guys hop in, man. I post analysis every day. I'm in the main chat every single day answering questions. It's just free value. Like, if you want to ask me stuff, I'm in there. And then for the people that want to be mentored, that want, you know, a full course, that want everything laid out step by step, I have an academy for that. So I have students in the academy, and I offer a free trial for that. So if you guys want to do that, you can do so right here. And if you don't want to, that's completely fine, man. It's just there for the people that want it, right? If you want mentorship, if you want to be guided and a shortened learning curve, then you have that as well. And I offer a free trial. So join the academy, man. But USD ZAR. South African Rand. Yeah, I've never traded South African Rand, that's for sure. USD ZAR swept this monthly buy side liquidity. Major order pairing. Look at how price moves, right? Look at the reaction we had after sweeping that buy side. Because it's fundamental. This is what price does. That's a strong rejection. I don't love this internal on the weekly. See, this weekly internal is lower probability to me because of this buy side sweep. Because now we may want to seek for a discount around the monthly. And so because we just swept this is a strong reaction. I'm not really anticipating this weekly gap to be high probability. This is a low probability weekly gap in my opinion. And that's not the type of internal that I would want to trade. Appreciate clearing the small doubts. Absolutely, bro. That's the best part about it. You know, when you have someone that's already been through the ringer, you know, I can just kind of give you the guidance, and you don't have to get burned by the stove and learn for yourself. You know, I can tell you what works and what doesn't. This is a lower probability gap because we swept that monthly buy side. Like I said, we may want to reach for the next sell side or discount array. I would be waiting for more confirmation to trade this. We also have daily bearish order flow against you. So this is just a lower probability long, in my opinion. I believe you were looking at longs. Liquidity was taken, right, exactly, Kago. Liquidity was taken on external, then price came back to internal. For now, I'm wondering if I should take a trade when market open, target external. It's a lower probability trade because the monthly just swept that buy side. That's a major order pairing objective where we may want to now reach for a discount array and validate this. And the reaction thus far has not been good out of it. So I'd be waiting for more confirmation than just trading the first gap out of it. But I would usually just opt for something higher probability. You got to enable super chat. I have no idea how to do that. I just turned monetization on. I didn't even have it on. I forgot. But yeah, I have no idea how to do that. Definitely will be active in there. Awesome. Love that, man. Hopefully you get what I'm saying about the USD ZAR. Right? You want to be trading. Let me show you an example really quick, Kago. This is a good learning experience. And then I got to go because I'm kind of in a rush. But I love helping, man. I love talking with you guys. Just love it, man. It's so fun. You see the difference here? Look at the difference in gold and the internal, the external that it's creating, and compare that to USD ZAR. So not all boundaries, not all fair value gaps are created equal. Gold, when you understand intermarket analysis, like I talked about, that's an edge. You understand that the flow of money is in gold right now because they're risk off on indexes, right? So really think about that. Intermarket analysis. This is another reason Harmony has edge. It's understanding the flow of money. When they're risk off with indices, metals get pumped. So the money is in gold. But all that aside, just looking at the candles, look at the difference here on ZAR compared to gold. It's sending it back. I'm not really trying to show. Yeah. All right. So look at how ZAR swept this major buy side objective and is working back into the range. Look at how the order flow from the top down is just consolidation, right? The monthly is straight chop. The weekly, it had a large expansion, but this really isn't the cleanest price action compared to gold, which is a straight uptrend. You can see the money is in gold. It's expanding. There's no consolidation, and there was no buy side sweep up here. There's no objective that was already taken. So this is just a much higher probability boundary to operate within. This internal to external boundary is much higher probability than USDs are. So when you're swinging and when you're looking for trades and you're looking for the highest probability trades, you want to be factoring that in. So your job every week when you're swinging is to pick the highest probability swings, because you can go through and look at all these, right? There's going to be multiple things that you can swing, but your job out of them is to pick the highest probability ones. It's not just to take every swing. How do you confirm external to internal? I only like trading external to internal when it's a stop hunt. So when it's in alignment with order flow. I don't like trading counter trend external to internal. So like an example of a stop hunt is this consolidation. We hunt these lows. See if I can find something else. I like to trade continuation stop hunts external to internal in alignment with the order flow. What are the major trips for trading harmony that may trip people up? That's a great question. A lot of the things that I talked about, understanding that it's not just the framework that I give that gives the edge, right? It's not just draw the PD ray and then the entry with SMT. It's about positioning yourself in the right asset that wants to expand at the right time. That's the edge. I think that's what trips people up. And so like that USD ZAR example, well, things like this trip people up where he's considering this weekly internal. Let's say the same week we had this. I don't trade USD ZAR, so let me make that very clear. But if I was looking at Euro or indices and they had this, whereas opposed to gold that had this, well, I know to prefer gold here. I know that gold is higher probability. I know that gold is the preferable trade there. And so it's things like that that I think can trip people up, because you're filtering, you're picking the highest probability trade. Other than that, just for value gaps, consolidation, over trading kills people. I had multiple students message me last week saying that they blew accounts or went into drawdown during this. That's something that trips people up with the model. It's just all about knowing when not to trade and knowing what to trade. That's all the stuff that I teach. Perfectly understood this. Awesome. Love that. I love that. That's the best thing that I can hear. Appreciate you guys, man. You guys are awesome. I'm gonna be posting more YouTube videos. I hope to see you guys in the Discord, man. I love to help. Love to see the growth. I'm rooting for all of you. If you have more questions or anything, let me know. I'm about to be driving, so it might take me a little bit, but I hope you guys have a great Easter. Happy Sunday. Excited to continue watching you guys grow. So hop in the Discord if you're not in there, and let's chat. But have a good rest of your day, guys, and I hope you got some value from the stream.